Sandy Chaikin is co-founder of Chaikin Analytics, a groundbreaking stock research and analysis platform. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that continues to outperform the S&P 500 and most money managers. Sandy is living proof that you don't have to be a financial expert to pick winning stocks. Thousands of investors attend her industry events and weekly webinars on fearless investing by following the Chaikin method. NASDAQ.com, Daily Worth, and Elevate all feature Sandy's investing articles and analysis. To get us started, here's Sandy Chaikin.
Josh, thank you so much, and thank you all who are attending today's session. This is great. I know many of you are from the community that shares Jim Cramer. Jim Cramer and Mark have done a number of presentations together, and the majority of you today have attended at least one of those, which is great. So as you know, they talk about what stocks and they make recommendations. What I'm going to show you today is really the nitty-gritty of how you can do that yourself, how you can empower yourself to find those great stocks to put on your shopping list yourself and not have to wait for somebody else to do it for you. All right, so let's look at where we are in terms of the overall market. A lot of volatility, right? Up, down, up, down. Every time there's a tweet or something coming out about the trade tariffs, as there was 15 minutes ago, you know, the market reacts pretty aggressively up or down. So we see this as opportunity, and I know many investors see this as a problem and are fearful of it. But what I want to do today is really show you how to take advantage of that volatility so it becomes your friend and you can profit on the volatility as opposed to fear it. So let's look at the SPY, the S&P 500. This is the benchmark against which most of us measure ourselves. And you can see here by the choppy green line that it's been extremely volatile, particularly since October, when kind of the cascade started to happen, and there was a lot of selling on emotion. There was a lot of selling by these programmed algorithms that then trigger further selling. This has been a crazy quarter, the last quarter of 2018. But you can see there are some patterns, and I've outlined the pattern back in February, March over here with this W pattern. This is typically what Mark and our chief market strategist, Dan Russo, say is a typical reaction to a market swing, this W pattern, which we had here, right? Up until December, when it broke through that bottom support level and went even further. That apparently is not typical. So by all measure, before that, we thought we'd hit that W pattern and things would start going up. Instead, they took a sharp dive down, but now have been on a rage going up since then. They've been up 10% since that fiasco day, December 24th, when there was so much selling. So it's anyone's guess, frankly, where it's going to go from here. But what we want to do is to be prepared so that when there are pullbacks, and the market experts, including our experts, think that there will be a pullback. They don't know when, but there will be a pullback. We should be ready with a list of stocks that we want to take advantage of buying. And that's what we're going to do today. So let's put these pullbacks in perspective. We've seen declines in the since February or so of 10 to 20%. And going back to 1945, there's been 27 periods of a similar decline like that. And then on average, you stay in that decline for 4 months. And on average, it takes then 3 months to recover. So if you look at, let's go back to that SPY, look at October as the beginning of this decline. You had October, November, December, and now January. this could count as, these 4 months going into the end of January and then recovery into the spring. So, I mean, it's likely that first and second quarter, we're going to start coming out of this, what's been a decline. Fear. How many of you are fearful of what's happening in the markets? Fear has gripped the stock market. This indicator is now at a 31. It was 2 weeks ago over all the way to the left, extreme fear. So people are feeling a little bit better since that bottom on December 24th, and I'm sure that's due to the fact that we're up 10% since then, which is a good place to be. However, many investors are sitting out that rally. Many of you as investors were hesitant to get back in and had your money in cash and have missed out on that 10% rally, which is a shame. So it's like, how do you know when to get in and when to get out? Well, we're going to help you with that today. That's part of the process I'm going to take you through, not only how you find great stocks, but how you know when to get in and how you know when to get out. So the list for you to build today is, and I want you all to get out a piece of paper and a pencil and have a list that you're going to build on stocks that you're interested in buying when there is a pullback. That way you'll be ready. These pullbacks can happen momentarily, at the drop of a hat, as we've seen. So this further kind of is proof of the volatility we've all been feeling. This was just from one day a couple of weeks ago. I mean, you can see the swings of the markets have have really whipsawed investors around. So it's how do we tame that volatility and make that work for us? And here's why we need to tame it, because when we run for the exits, and which typically happens, the research shows when the market drops, it could cost you 4% a year on average, and you don't want to keep giving up 4% a year every time you run for the exits. You need a plan that works and keeps you on a course and is consistent. Wherever the market goes, you need a plan that'll take you through that market and bring you through to the other side. Now let's look at another little bit of history here. On average, the S&P has grown almost 10% a year, and that's great. Last year, or 2017, I think it was up 20%. Last year, 2018, it was down 10%. So there's your average. The last couple of years, it has been 10%. However, individual investors have only averaged 2.5%. And that's because we're people. We buy on emotion, not fact. We let the emotions get in the way, primarily fear and greed. So we want to trade like Warren Buffett. We want to invest the way he does. And what he says is to be fearful when others are greedy, and greedy when others are fearful. So right now, people are greedy. They're bundling. They're buying up stocks, which is pushing the market higher. That's that 10% rise we've had since Christmas Eve, and that in turn causes the price to go up, supply and demand. We want to wait for those investors to be fearful, start selling. That's when the prices come down, and that's when we want to go in with confidence and buy those great stocks, basically on sale. So as I said earlier, get together a shopping list and be ready to take some notes, because I'm promising you that you're going to discover how to find the best stocks to buy on those pullbacks, and how to know when to buy as well. But let me just take you back a few moments to how I got started investing in stocks. As Josh said, I just started investing in individual stocks right after the 2008-09 meltdown, and that's when we created Chaikin Analytics, and I started investing in stocks in 2012 when we had the platform ready. Before that, I was in mutual funds. I worked in senior marketing roles at Elizabeth Arden and L'Oreal in New York City, and then the Franklin Mint. And I had the choices of investing my 401k plan in mutual funds, which was great. So I did that for a while, but as my career grew and I became busier and the 401k plan grew, I didn't feel confident that I knew enough to really manage it. So on the strength of a recommendation from a friend to a financial advisor, I engaged an advisor, and he took those funds, put them in, sold what I had, and put them into 8 or 10 mutual funds of his choosing. That went okay for a while, but then along comes 2008. I doubt I have to remind anyone what happened during that fiasco of a year, 2008-09. My portfolio dropped by over 50%. And that was a pretty devastating time for me because I had built that fund really religiously for 30 years. Excuse me one second. And had really given up a lot of pleasures that I could have enjoyed to stash that money away and see that it grows for my retirement. So to see that disappear, you know, cut basically in half was really, really discouraging. But what that did for me was it made me resolved to take control. I mean, I said, good heavens, I've got, you know, I work hard enough for this money and then I turn it over to somebody else. That doesn't make sense. You know, I need to understand how to invest myself. So at least I can have a voice at the table. Many of our members are financial advisors, and that's great. And it's wonderful if you're working with one as well. But what I urge you to do is to not do what I did and just turn it over. But if you are working with an individual money manager or financial planner, understand what he or she is doing. You know, have them explain to you why they want to invest in a certain instrument, and have a voice. You know, have a way you can back test that. And that's where Chaikin Analytics can come in and help you do that. So you're not in a bind the way I was of just kind of blindly turning your financial future over to somebody else. But I mean, I have to say, since I've taken it over, the account has grown more than 4 times. So it's all back happy and healthy now. But that was a trauma that I hope to never go through again. And I really want to encourage you to take the steps that I've learned now the hard way so that that same thing doesn't happen to you. So why listen to me for the next hour or so? Well, as Josh said, I've beaten the S&P 500 since I started investing in 2012. And by correlation, that means I've beaten 4 out of 5 pros, because the research shows that 4 out of 5 pros underperform the S&P. So I just put a smattering here of some of the stocks that I invest in. Most recently, I've been in down here in 2008, WellCare, CNC, Crocs. I mean, these are all stocks that were up nicely on a yearly basis. You know, when the S&P is on a yearly basis, I think it's year over year, I think it's 6%. So you can see that these are significantly outperforming the S&P 500, and that's what you can do too. There's no magic to it. It's just having a disciplined plan, following that plan, and being resolute to stick by that plan and let that plan guide you. So what's the point of all this? Well, obviously we want to make money. And when I was growing up, that really wasn't considered ladylike for a woman to be interested in money. I mean, it sounds crazy, but it was. And I'm not that old, but it's taken me a while to really get comfortable wanting to make money and to be able to talk about making money. And that's all good. But what's it for? You know, what's the point? Well, the point is to not only put some money, you know, a good portion of it towards your retirement fund, but also to enjoy some of those profits on the way. And I'm showing you some pictures here of a trip Mark and I recently took in October. We were in Italy, in Umbria, the entire month of October, at this beautiful little hill town called Spello, which is what you're looking at right now. And this was paid for with the profits that I make with Chaikin Analytics. So, set your sights on something, that you want to kind of reward yourself with some of your profits. And it makes it a lot more fun to be in the game when you're working towards a certain goal. Now, the little doggy up here on the right is the little doggy we adopted when we got back from Italy in November. Scotchy is his name. And there's no reason why I put him there other than he's just a pure joy, and he's a great little guy, and we're having a lot of fun with Scotchy. So that's fun too. So I'm going to pause here. Josh is going to put up a poll question for you all to fill in, which he sees he's popped right up here. Just tell us now, what's giving you pause? What is your concern with investing or trading right now? What gives you pause when you go to hit that buy or sell button? If you could just fill out, it's all that apply, right, Josh? They can just fill out whatever of those that apply to them.
Yes, any and all that apply.
Perfect. And then we'll tally them at the end and see what you all, what your feedback is.
So I'll give it just a few more seconds.
Okay.
And then we'll tally them up. But I bet you can guess what's in the lead, Sandy.
It always is, right?
All right. Sorry, I'll stop the suspense and I will share with everybody. So here we go.
Right. Whoa. Josh, I think timing at 84%, I think that's the highest it's ever been. It's always number one, but it's usually in the 70s, if I recall.
It seems probably the highest I've seen, yes.
Wow. Okay, so timing. Yeah, timing is your biggest challenge, which is consistent with what we hear. The next one is emotions, but boy, that's half of the concern there. And let's see, information overload is high, as well as uncertainty. Okay, great. So this is consistent with what we typically find, with timing being the clear-cut winner. So thank you very much for sharing that with us. I've already built that into this presentation. So the 5 steps that I'm going to take you through incorporate the solutions to those challenges. So we're going to spend a whole section on timing. That's number 4 here, when to buy and sell. And by giving you this disciplined approach, this will allow you to take the emotion out of your trading and investing. Take the fear out. You can trade with confidence because you've got a methodical approach and it's rules-based that you can follow. We're going to take out the information overload, which is what do you believe and what don't you believe. There's so much news out there, it's really hard to know what to depend on. So we say you've got to have tools you can trust that not only take the emotion out of it, but tune out all the noise. And the uncertainty in the market, the volatility, that's what we're going to show you how to take advantage of, so that you can be ready to, with your list of stocks, and then once that volatility works in your favor, i.e. you get a dip, you go in and buy. So these are the 5 steps we're going to be going through. The foundation of what I'm going to be showing you is on Chaikin Analytics. This is the platform that we use. It's on desktop and iPad, same membership bundles, both platforms into one membership level. And I'm going to be showing you the desktop charts going forward here. But what I want you to how I want you to feel when you come out of this is that you can do this, that you can feel confident versus fearful, and be able to say to yourself, I can do this. This isn't that hard and it isn't that complicated. If Sandy can do it, I can do this too. So let's start with tools that you trust. If you don't have great tools that you have confidence in, you're not going to make very good choices. You're not going to make good decisions because those decisions could go haywire. So it's critical that you have reliable tools that you trust. For us, that's the Chaikin Power Gauge rating. This is the model that Mark created. And the way this is the foundation of our platform, Chaikin Analytics. The way this all happened is after that 2008-09 meltdown, when, like many of you, I lost a huge percentage of my 401k plan. I was totally disillusioned with Wall Street. And Mark had spent his career on Wall Street, some 40, 45 years on Wall Street, building tools for institutional investors to use to help them invest their clients' money better. So he said, I'm going to come out of my 10-year retirement. He had sold his company to a division of Reuters. He said, I'm going to come out of my 10-year retirement and take the same knowledge that I learned 45 years on Wall Street and build that into a model that someone as novice as an investor as you, Sandy, can use and understand and use it to make decisions. Because so many of us, there was literally billions of dollars coming out of traditional brokerage firms and going into self-managed accounts like Fidelity and Vanguard. And people were setting up their own funds, and their own accounts, but they didn't have the tools to make good decisions or to even know how to make good decisions. So that's what we did. That was the foundation of how Chaikin Analytics started back right after the meltdown. It took Mark a number of years really to test all the 200 and some factors that go into a model and to boil it down and create what looks like a very simple gauge here, which is a reading on a stock's likelihood to out or underperform the market over the next 3 to 6 months. So think of the power gauge rating as a GPS for stocks. It tells you where that stock is headed. And it clearly solves the information overload problem. Information overload was, I think, your number 3 concern. What do you believe in? What do you look at? How do you make sense of it? I mean, how would you take the data on the right and draw a conclusion from that to make a decision? It'd be pretty hard. So the left you'll see is an overall power gauge rating for Starbucks. You can see green, it's very bullish, and it's broken down into 4 components. And then within each of those 4 components, there are 20 factors. So of the 200 factors that Mark tested before he cemented the power gauge rating, here's the 20, broken down into those 4 components that he found were most predictive in identifying a stock's potential to out or underperform the market over the next 3 to 6 months. Now, I've green highlighted experts because other than the overall rating, I like to look at this expert. This is kind of our secret sauce. This is data that's not that easy to find elsewhere. But rather than going and looking for each of these data points on any one stock, you have it all here right on one chart. So just, I'm going to come back to the experts and why I'm using that, but just know that that's a component that I pay particular close attention to when I'm deciding whether to invest in a stock or not. So why should you believe in a model? Well, this well-known analyst says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. Makes sense, right? It's rules-based instead of emotion-based. Now, a little bit of substantiation on why you can depend on the power gauge rating is that in testing, both in real time and back testing, the performance of the power gauge showed over the last, say, 20 years, and part of that's back testing, of course. If your portfolio was only in bullish rated stocks, it would be up an average of 20% a year. If it was just, that's very bullish. If it was just bullish rated stocks, it would be up 12.4%. And that's opposed to the neutral ratings, which would be 8%, which is pretty close to that 10% per year average we showed for the SPY. On the other hand, if you were investing only in very bearish stocks, your portfolio would be down an average of 1% a year. So clearly you want to go with bullish and very bullish rated stocks and be in the upper tier of this performance, right? The model and the platform are used by not only the pros, but quoted in the media, used by hedge funds. Of course, there's Jim Cramer. Many of our other partners, including John Malden and John Carter, use it as well. Fidelity Investments use it. So there's a lot of professionals and individuals out there using Chaikin Analytics and the Power Gauge rating to make better informed investment decisions. And really the culmination of Mark's life work was really kind of sequenced back in late April when we've been working with NASDAQ to create indices that are basically ruled by the Power Gauge rating. And Index IQ, which is New York Life's investment arm, licensed those indices and has been offering them through their network of financial advisors so that the advisors can invest their clients' money in ETFs that are basically directed by the Power Gauge rating. And they invited us to commemorate the 1-year anniversary of launching those ETFs back in May. And you can see here the banner up in Times Square of the Chaikin Power Gauge rating revolving around it and opening the opening bell. So it was pretty exciting, and a big, great kudo for Mark to have this as part of his career, this type of recognition. Jim Cramer, I know many of you, as I said earlier, most of you or the majority of you have had attended at least one of the fireside chats that Jim and Mark have done over the last year or so. And Jim says, I want to explain why I love Mark Chaikin's stuff. It's simple, it's understandable, it's rational, it's not emotional, and I use it constantly, and I almost never want to go against it. So Jim is a big believer of the Chaikin Power Gauge rating. He also loves Chaikin money flows. You hear him on the 6 o'clock CNBC show every night. He often calls out Chaikin money flow, which is one of Mark's earlier indicators that he created some 30-some years ago that's still relevant today. But in any event, Jim is a big believer of the Power Gauge rating. So I want to move on now to how you identify a classic bull. These are the criteria that I look for in a stock. But before I do, I want to just do a little check-in here with you all. If you'll just type into your Q&A box if you understand the Power Gauge rating, because that's the foundation of what I'm going to be building the rest of these steps on. So if I wasn't clear in explaining it in a way that you understand, I need to know now so that I can pause here for a minute. So if you'll just type in go, for instance, or no go. Into that Q&A box. Okay, great. Yeah, Sandra, Cal, Anthony, Molly. Okay, great. Thank you. That's helpful. So we'll go forward. Okay, step 2 is what to buy. We have this pattern that you see here of criteria that need to be met in order for a stock to be considered a classic bull. And a classic bull certainly is the stock that you want to be investing in. These are the types of stocks you want to put on your shopping list. So let's look at a few of those actual examples on the charts. But before I do, this is really important to understand this chart. It may look a bit confusing, but this is basically the way a stock price moves. As we all know, it doesn't go straight up or straight down. It doesn't stay in any one place, right? I mean, when I was marketing Armani fragrances, I set the price on a fragrance, and it was $100, whether you bought the fragrance in January or whether you bought the fragrance in June. Obviously, that's not the case with stocks. They go up and down, sideways, and all over the place. If you understand the way a stock price moves, which is what this Dr. Wyckoff charted out some 95 years ago, this will really help you with your timing. Because what I've done is I've circled these dips here, which is a natural progression of a stock price. It will always dip at some point. These are where you want to be buying. So this is why I want you to get your stock checklist of stocks to buy ready, so that when you do get this pullback, because we're right now into pretty much this reaccumulation phase. I mean, the market's been pretty well going straight up, right? So we could be right up in here, and this pullback could be as imminent as 3 days away. That's how the timing could be. So you want to be ready with your list to buy stocks when we get that pullback, because right now they're all way up here. You don't want to be buying them now. They're too high. So put this as a mental note in your brain, that this is the way a stock price moves. It zigzags across, it juts up, pulls back, bursts up again, sideways. I call it zigging and zagging. Okay, so let's put that into practice here with the stock Regeneron. We read this stock from the chart from the bottom up. So let's read this as a classic bull. A classic bull has a green power gauge rating. The ribbon along the bottom of this chart is the power gauge rating. You can see for the year, really since June, the power gauge rating has been bullish or green on this stock. The indicator above it is relative strength. This is this green kind of heat map here. This is how strong is this stock relative to the SPY. Because remember I said in the beginning, we measure ourselves against a benchmark. The benchmark typically is the S&P 500. Because if you're not going to buy stocks that outperform the SPY, you might as well just invest in the SPY and be content with a 10% on average annual yield. That's not bad. It's a lot better than most individuals do. But if you really want to get these outsized returns of these, 15, 20, 30, 40 and up percent gains, you're going to want to look for stocks that have a pattern like you see here. Relative strength is green. This stock is outperforming the SPY. I'm going to come back to overbought, oversold, and I'm going to jump up here to Chaikin money flow, which I indicated earlier is a indicator that Jim Cramer relies heavily on, as do most institutional investors. This is an indicator Mark created some 35 years ago on Wall Street for the institutional investors that measures the money coming in and out of a stock. And why is that important? Well, it's important because it's supply and demand. I think of it as an auction. If there's a lot of people on eBay bidding for a certain dress or pocketbook, for instance, that price is going to keep going up, right? Because there's more people that want it. If nobody wants it, or few people want it, that price is likely to pull back to make it more appealing. And there's less demand for a stock. So it's the same thing with stocks. Think it's supply and demand. If there's a lot of institutional investors coming into a stock, as there were here, June, July, August, look at this big chunk of green and look what happened to the price. It just skyrockets up, up, up. Look what happens to the price when money flow goes red or neutral. It goes sideways. And of course, this is October. where we really can't fairly rank a stock based on money flow, because pretty much every stock in the indexes had negative money flow because there was so much selling going on October, November, December. So this you have to look at now in the context of where we are today, and that there's still a lot of money coming out of stocks. What we're hoping from this low back December 24th is that now these will start going green. Money flow measures the past 21 days, the 21 trading days, which still now includes December 24th, which is this bottom here. So it's reading that into its algorithm, which is why it's still red. But in the next week, many of these money flow indicators for stocks are going to start turning green. So I don't want to get too deep in the weeds there, but I just have to put that caveat in because of the market condition today. So this is then considered a bullish stock. These green triangles here are buy signals. Red are sell signals. We have 6 pairs that trigger when certain criteria is met. This one is relative strength. This one said back in December 24th, hey, this stock is outperforming the SPY. On that big down day, this stock is outperforming the SPY. If you're thinking of buying it, now might be a good time. It happened also to be oversold. And let me explain this in the context of that Wyckoff chart. This measures those dips I was talking about. These are the dips, the pullbacks that you want to wait for. Something like this. You don't want to buy it when it's up here. Let me go back. Right now we're up here. You want to buy it when it comes in on this correction, this pullback, which inevitably will happen. I mean, even when they're going up, they have little pullbacks. As you can see here from last week or so, it pulls back to some degree. You're always going to want to wait for that pullback before you actually pull the trigger and buy the stock out. You don't want to buy it when it's arcing up here above the 70 on the overbought, oversold. That means it's at a high. So wait for that. Wait for that pullback, and we'll get into that more of that too as we go through the charts. Okay, another classic bull here is Salesforce.com. This is a stock that Mark's been talking about, and actually Cramer, and he talked about that back in November as a stock that they favored. This also has that relative strength buy signal back. Looks like December 24th, right around then as well, saying this is outperforming. This stock power gauge isn't as strong as Regeneron. It really just turned in the last week or 10 days, but relative strength is outperforming the SPY. And look at the money. The money has already turned positive on this stock, which is a really good sign. And look at October. October wasn't the washout that it was on many stocks. This isn't as pronounced money flow, and they've pretty much come out of it. I mean, December was pretty good with a little bit of ticking to negative, but now money flow has gone positive. So this is another great stock to put on your list. But again, wait for that pullback. You don't want to buy it when this overbought, oversold is way up here. You see that's up here. It's bumping up against this upper volatility band. You want to wait for that pullback. All right, so how do we find these stocks? It's all great that I'm showing you these, but how are you going to do this on your own and find them? Well, we have what we call a screener, and this allows you to put in the criteria that meet your requirements. And I play around with it. I'm doing a little bit different now, screener, than I do, say, on in 2018 when we were pretty much in a bull market the whole year. You have to adjust the screener for real time, for what's happening in the market today. And today there is a lot of volatility, as we all know. So what did I put in here as criteria? it's really put that classic bull criteria, starting with a power gauge rating that's bullish. And I took the S&P 500. Show me all the S&P 500 stocks, so it's close to 500. But I only want to see the ones that have a bullish power gauge rating. And then I showed you earlier when I was going over those 20 factors that make up the power gauge rating, that the expert component that rolls up, 5 of those components, I like to know that it's a bullish rating on the overall component. That means the short sellers aren't shorting it. The insiders are buying it. The analysts are upping their estimate trends. And then the estimate trend, which is one of those factors, I also want that one to be bullish as well as an individual factor. I want the analyst to be behind this stock. So I can include those here as bullish. And then for relative strength, I want to show some persistencies. I want to show consistency. So show me the stocks that have had a strong relative strength for 6 months. So they've been outperforming the SPY for 6 months. So I went from a sample of 488 stocks to start with, and now I'm down to 14. And then this little tail here goes underneath it, but I couldn't put it all on one shot and show it to you the way in this format. So I overlaid mid and large cap, and then this beta I put in there, because if I don't have the beta in there, which says show me stocks that are volatile, I get the utilities. And the utilities have been strong, but they're kind of strong. They're steady and strong. They're the 10% a year pluggers. They're not going to be like some of these stocks in Regeneron or Salesforce.com. They don't have that kind of volatility, that kind of movement in them. They're sure and steady. And I'm looking for big performers. I'm looking for outperformers. So that's why I put that beta in there, that filter out those sure and steady and just show me the really ones that have more volatility, but that have more upside potential as well. Okay, so what did I find? Okay, here's the 4 stocks that I found with that met that criteria. So you can see literally in seconds, and I can save this search pattern. So when I go back into my screener, I can just go on to my save screens and click on this one. And this is what I get. And I just hit run, update, and it'll run it for that day. You could run this every day if you wanted to. I tend to do it once a week. But here are the 4 stocks, including Regeneron and Salesforce.com, that I found on those on that screen. Now, because today has been so volatile, and there was such a big downward shift, really all of the 4th quarter, a lot of stocks are showing power gauge ratings of neutral plus, which means they have underlying factors that are bullish, but they've fallen below a long-term trend line. And if they have fallen below that trend line, even for one day, it'll register neutral plus. So these are still really good stocks. These are still really good candidates for your shopping list. And as I said, you have to kind of adjust for the market right now, when there's a reason why there's so many that are neutral plus, but they're still really good, solid candidates. Let's look at a few of them right now. Okay, so this one's been neutral since October. A lot of stocks, went below that long-term trend line, which is the orange line, in October, and haven't come back, but they are, they're kind of making their steady way back up again. Relative strength is strong. Money flow is still coming out of this stock. So if I were going to buy this stock, I'd say, well, I'm just going to wait for that money flow to turn positive. I want a little more assurance that the institutions are buying. And that 21 days is about to pass. So next week should show me that this has turned positive. And that would give me more confidence to say, this could be a good stock to buy on a dip. But I want that money flow to turn green. Same with Intuit. But you can see with Intuit, the money flow is just turned green. You can barely see it here, but it's here. So give that another few days and that'll start, going up into this green kind of mountainous line. But, again, this is a stock that's done really well. It has not had those huge swings like the SPY and some other stocks have had in the fourth quarter. It's a little bit steadier, and it also gave you some buy signals along the way. These happen to be relative strength buy signals. If a stock is rated neutral, power gauge rated neutral, the only buy signal that will trigger is relative strength. All the other signals, part of their requirements are a bullish power gauge rating. So again, you have to kind of modify a little bit and be a little bit more broad-minded in a market like today. And then one more from that list of, I think there were 14, is Microsoft. And again, the money flow is just ticking positive on that. It's outperforming the SPY. It's still oversold. You see, it's still way up here. You don't want to buy it up here. You want to wait for that pullback. But it's encroaching up to its 200-day moving average. So it's going in the right direction. So we get a lot of testimonials. This one here is from Sandra last year, actually pretty much almost a year ago. And she said her 401k plan was up 47%. In 2017, that was the year the SPY was up 20%. She more than doubled it. I couldn't have accomplished that without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this, and here is how," was so empowering. My husband has confidence in my judgment. Thank you, Chaikin. I feel empowered. Life is good. So this is, as I say, this is how I want you all to feel, empowered and with confidence that you can do this too. All right, let's move on to timing. Just take a quick pulse here. Were the screeners helpful? If you want to, so that you didn't have to take all sorts of notes on the screener, what you can do is email us. I think Josh is going to put in the email and the phone number to contact our support team, and they can email you PowerPoint slides of those criteria and the findings on both the bullish stocks and the neutral rated stocks. So if you want those, to print out and have at home and help guide you going forward, please contact our support team. Okay, so I will keep moving here. Timing. Okay, this is the one that most of you had the biggest challenge with. How do we help you with that? Well, I've been pointing out the buy signals, those little green arrows, and I've been pointing out the oversold indicator, which measures that Wyckoff pattern. You want it to be dipping down when you buy a stock, not peaking up here at its high. So let's see how you know when those buy signals have triggered. I mean, you could go on to each of the stocks that you're looking at and look for them, but that would be pretty not very time efficient, right? So you can also then, we've made this easy by doing what we call an alerts view. And this is basically taking any list. I've taken my watch list here, stocks that I'm watching to buy. And you can overlay this alerts view on it with a click of your mouse. And in seconds, it'll show you any buy or sell signals, which you can see are at the top. and any other alerts, any important data points that may affect my decision to buy or sell a stock. So for instance, it's telling me these, like for Amgen, the power gauge has turned bullish from neutral. You know, it's telling me there's a earnings surprise here on CMA. It tells me there's an estimate revision down here. So it tells me on stocks that I'm watching, or any list. You can put this on the SPY 500, you can put this on the Dow 30, you can put this on your watch list, you can put this on your screener list. Show me what's changed today, what I need to know about. And here's kind of the executive summary. And then by clicking on any of these tiles, you can go into the detail. The other way you can get it, in addition to, is that we give you the option to receive these alerts on your My Stocks list, stocks that you're owning, that you own, daily before the open. This is today's, that you can see came in at 8 a.m. and it's telling me there's a sell signal on a stock. Jacobs Engineering, a stock that I own, has triggered a sell signal. So I'm going, wow, okay, I've got to pay really special attention to this. I might want to get rid of this stock. It also, if you choose to, will give you the signals on the SPY, and you can see for Apple, Apple has triggered an overbought sell signal at what, 155 today as well. So these I think of as the executive summary, but by getting this alerts email before the open, you're prepared and have a game plan, you know, before the bell rings at 8:30 or 9:30, sorry. Okay, so Alex, another one of our members, says, I can't tell you how happy and grateful I am to have found Chaikin. I found you through Jim Cramer, and that is a day that changed my investment life. So Alex, we're thrilled that we can help change your life for the better. Okay, so that's when to buy, when to sell. I think this is really the most challenging part of all of investing, is when to sell. I've broken it down into two categories: selling to take a profit, or selling because you sense a stock is breaking down. So let's look first at the scenario of selling to take a profit. Pretty much three criteria can happen. Any one of these three can happen, which could trigger me to take my profit. Hits that upper volatility band, and I'll show that on the next chart. Price is overbought. It's peaking up, you know, above that overbought, oversold line, or it spikes up after a strong earnings report. And we just started the first week of earnings, and we know that during earnings, stocks can be more volatile than normal, because if they exceed analyst estimates when they report, a stock could very handily pop up 5, 10, 15% in a day. That's when you want to say, thanks very much, I'm going to take my 15% profit and let somebody else buy it. And I've done that many a time, and taken some really nice profits off the table. Okay, so let's look at examples, and I'm going to spend a little bit more time on these than normal, just because I know this is the most challenging part of investing. Okay, so this is a stock that I owned. I bought it back here in July with this buy signal. I got an overbought, oversold buy signal. That's this green triangle here, late July at 252. I knew they were reporting earnings. I wanted to buy this stock before earnings because I could look at the history and see with past history, and I can go back 5 years, that they tend to outperform analyst estimates and spike up after earnings, which is in fact exactly what they did. So I stuck with this stock because everything was so green. Classic bull here, right? Chaikin, power gauge ratings green, relative strength is outperforming. A lot of money coming into this stock. And it just went up, up, and up, and up. But look what happened here, the end of September. This is where I sold it, up here, late September. And I sold it at $3.19, taking a 27% profit. And now why did I do that? Well, look what's happened to money flow. Money flow started to turn negative, right? And there's a rule that we've watched kind of evolve here at Chaikin that has become very predictive of knowing when to get out of a stock. And I'm going to tell you what that rule is. It's when a stock peaks up at an all-time high, as you see it did back here at the end of September at 319, 320, and money flow is negative, that's telling you the institutions are selling. So they know something we don't. So that's what we call this money flow sell alert. That's telling you there's no triangle for it. You just have to know to look for this pattern, but it's an incredibly powerful and predictive pattern to say, take your profit and get out of the stock now because the institutions are selling. And that's exactly what I did. And you can see then what happened in October. It didn't have the downward spiral as many other stocks did, but it still, went sideways or so. And then they have, since kind of ratcheted down, 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 and down, and now it's back on a more positive foot. But you don't want to watch your profit go from, say 319 down to here a low of what's this, about 220. I mean, that would be heartbreaking, right? You don't want to watch that. You don't want to live through that. So that's why it's so important to know this pattern and look for it. And let's look at it on a second stock where a similar pattern evolved on Amgen. So here again, the yellow arrow is where I bought this stock in August. I got a money flow buy signal saying, hey, there's a lot of money coming in from institutions. That's cool. It also was oversold. It was dipping down, and it filled out this classic bull pattern of being all green, 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 green. And I get the buy signal. So I said, great, okay, I'm going to buy this stock. So I bought the stock. This also had been a Cramer long-term pick. I think he and Mark had been talking about this on a number of their fireside chats, most recently being November, but I'm pretty sure he talked about it earlier as well. But again, it hit this all-time high. That's this upper volatility band. Once it hits that upper volatility band, they tend not to hang out there. They tend to pull back. So that's another really good signal to you to say, hey, if it hits that upper volatility band, know that it's not really going to stay there much longer. So you're probably better off just taking the profit and getting out. And the money had just turned negative on this. So, and again, I said, okay, September 28th, I'm going to take my profit, get out of the stock at 208 and take a 6% profit. Hit that upper volatility band. Was overbought, meaning it was dipping up. That's where it's at its higher price versus lower, dipping down. You want to sell them up here. You want to buy them down here. And that, in fact, coincided with my sell up here. And of course, when the money flow turned negative the next day, that just confirmed that I had made the right decision. It's now, what is it, 201 now. It's doing pretty well. It's had a really nice comeback. But again, you don't want to watch that stock and go down, down, down to as low as, what was this one, probably 78 or so back here in December. So these are really powerful patterns to look out for, and they can really help you get out of these stocks before they drop. The other way to know when to sell is when your sense the stock is breaking down. And here again, I've modified these rules slightly because, as I said earlier, money flow measures 21 days, the past 21 days, historical institutional money coming in or out of that stock. And since December 24th is part of that 21-day history, when everything, basically, everyone was selling everything, you know, these computerized trading programs that just ratcheted everything down so that it was sell, sell, sell. It's not really an equal view of how to look at true money flow. So here I'm saying, okay, power gauge turns neutral and another indicator turns negative. I typically look at selling it then, but now I just take a closer watch and make sure that it's on that strengths lack of merit, as opposed to just, you know, the sell, sell, sell that was part of the whole market mentality back in December. Certainly I get a sell signal like I did today on Jacobs Engineering. I've been looking at that stock. It was up a little bit today, so I'm still watching it closely to probably sell that in the next day or two. If it drops below that orange line, which is the 200-day moving average, or the volatility band, which are those dotted bands up here, these are the volatility bands. I sail. I think of these as channel markers, because when you're sailing, you've got to stay in high water. When you get into off the channel, you could very easily run aground. And so I think of these volatility bands in that same pattern, that the stock price typically stays within these bands. So when you see it, you know, spiking up here, hitting up against that upper volatility band, that again is when you want to say, gee, you know, I should get out of this stock. So this is a stock I bought back here in April. With a money flow buy signal. Everything was green, so I bought it. It was oversold as well. And then I held on to it until it hit that upper volatility band. But look at the money. I mean, the money had come. I was a little slow on the draw getting out of it. I should have gotten out of this stock earlier. I was just basically lucky that it held on. But some news came out, and that's what caused this spike of 18% spike in one day. Some news came out that this company had just signed a contract with Puerto Rico to complete the rest of their electrical transportation and distribution system that had been knocked out from Hurricane Maria, and reconstruct the power grid. Huge contract. So the stock jumped up 18% on that news. You know, I couldn't find that news the day of, but it really doesn't matter. You just say, hey, thanks for that 18%. I'm out of here. And as you can see, I was really, really more luck than anything, because as I said, I should have been out of that stock earlier. But after that, it's just been, you know, pretty much down to below, what, 18. And I sold this stock at, where is 38? Yeah, I sold it at 38. It dropped more than half, down to like 17 or 16. I mean, that's a painful ride you don't want to take. So that's why these basic kind of guidelines, as you know, you can call them rules, but it sounds like a school marm. But these guidelines or rules, whatever you want to call them, are really important to have to help guide you. So take the emotion out of your decisions. I'm going to pause here for a minute and ask Josh to put up a little poll. Let's look at where this stock is today. Power gauge is neutral. Relative strength is underperforming the SPY, but look at the money. The money's starting to turn negative, and the price has started to go up pretty nicely since December. Is this a stock you would buy or not buy? And maybe if you'll just fill this in for us. Now that you've had the opportunity to look at a number of stock charts, hopefully your eyes are getting used to seeing these patterns.
One second, we'll share the results.
I know we're running a little bit over, so if you cannot stay with us, this is being recorded, will be sent to you tomorrow, but hopefully you can still stay. Okay, awesome. Don't buy, 82%. Exactly. You don't want to buy this stock. There's too much red in this chart. There's too much. It's underperforming the SPY. Neutral in itself isn't a deal breaker, but in line with underperforming SPY and such a lot of money recently coming out until the last few days. This is not a stock that you want to put your money in. There's much better candidates. I mean, go back to like Salesforce.com or Regeneron, Allergan, some of the stocks we talked about earlier, Microsoft. I mean, keep those on your list. Those have a much higher potential to outperform the market than a stock like this. Okay, great. Norm. Norm's been a member of ours for, what, a couple of years now, I think. And he says, through following your excellent system, his portfolio stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Does that sound familiar to anyone? Consistent earnings were just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So again, I want to instill in you, it's important to follow a methodology that you can trust so that you can have consistent earnings. That's what this is all about. All right, I need another 10 minutes of your time to go over avoiding pitfalls. So again, this is being recorded if you can't stay, but I'll just keep going, and hopefully most of you can stay, because avoiding pitfalls and knowing how to avoid those pitfalls is really just as important as how to identify the winners. You've got to protect yourself on the downside. And a classic bear has basically the complete opposite pattern of the classic bull. Let's keep in mind another saying that famous investor Warren Buffett says: avoid risk whenever you can. Well, that sounds pretty obvious, right? How can you identify risk? And that's what these stock charts will help you do, help you identify risk, before it's too late to get out. And again, think of the Wyckoff pattern. This is the same in reverse as the bullish pattern. This, the stock zigzags across like it did on the bulls. Instead of peaking up, it shoots down. It comes back up again, down again, zigzags across. Again, it does this whole zigzag pattern. You want to sell a stock, when it's up here or up here. You don't want to sell it when it's down here. That's the low. It's higher up here. You want to sell it on these peaks. And in our system, that's what's called this overbought, oversold. So you want to sell when it's up here. And for this, this stock, Apple, wow. Apple's the #1 stock owned by investors. So how many of you own Apple? If you'll just put Apple in your Q&A box. This isn't a test, but I suspect a lot of people own Apple. Okay, Sandra, Molly, Teresa. Cal says no. Good for you, Cal. Okay, and Daniel. Okay, great. I'm going to show you guys how you would have known not to buy Apple, or if you owned it, how you would have known to sell it, okay? And look, it triggered, as I showed you in that alerts email, it triggered an overbought sell today. It's saying this is peaking up, zigzagging up. It's a good time to sell this stock. It triggered that sell signal. But I don't own Apple. I've never bought Apple. But let's break this chart down. And I have this arrow here, again, going to that money flow sell alert, which is up here at, what is it, 230, early October, peaking up into that upper volatility band. And I put the red arrow there to show you that that's the money flow sell alert. That's when the stock reaches an all-time high and money flow is negative. Institutions are selling. And this is the pattern you want to be so aware of. If institutions are selling, they know a heck of a lot more than you or I do. So they know something you don't know. and you don't want to go against them. So Power Gauge turned bearish a few weeks later, at the end of October at $219, which in itself would have been a good alert to you to say, hey, Power Gauge bearish, I better get out of the stock. It's 219. That would have been better, and obviously not as good as your money flow alert up here at 230, but it would have been better, right? Because they did report on the 1st of November and guided lower, and of course we all know Apple's been on a slide, ever since. Guided lower, and it's went down to as low as, gosh, what is this, 140 something. It's now back up a little bit. It's up at 154. But it's still down 33% from that money flow sell alert that you would have first known about back in October 3rd. So, these are powerful patterns to look at. Now, what I did for you too is remember I told you the expert component of the Power Gauge rating is something I pay particular attention to. So if you weren't sure, you would say, oh, gee, I still really like Apple. Maybe I should keep Apple. Well, no. Look at the experts. It's very bearish. The analysts' estimate trend is very bearish. That's as bad as it can get, guys. You don't want to own a stock where the analysts are negative on it. Analysts' estimates can really drive prices, fairly or not. They have the power. And when they're saying this is we're guiding lower, you don't want to be on the other side of owning this stock and watch it go lower. And you can see pretty much insiders aren't buying this stock. Analysts are downgrading it. It's weak relative to its industry. I mean, these are all things you need to know about as an investor to give you an informed decision to say, I don't want to own this stock. Or if I own this stock, I should be out of this stock. And now is a good time to get out because you see it is zigzagging up, which means it's likely to pull back down again, once it reaches that peak. Okay, let's look at a few other examples. Again, this money flow sell alert, this pattern repeats itself over and over again. This is back on eBay. Oh, wait, I was going to do a poll. Sorry, Josh. I was going to do a poll on this, okay? They're reporting. Apple is reporting on January 29th. We show you the reporting dates up in here. So the poll is, let's pretend you own this, okay? Most of you don't, but let's pretend you own this. Would you hold this until January 29th? In anticipation of a good earnings report, given the data you're looking at right now? Or would you be out of it before they report on January 29th? Let's just give a few minutes here. All right, Josh, what do we have here?
All right, there you go.
Okay, 79% said no. Yeah, no is the right answer. With this kind of an outlook and looking at that expert component being very bearish going into earnings, chances are they're not going to beat analyst estimates. Chances are they're going to disappoint on January 29th and drop lower with all this red. So if you own this stock, you would want to get rid of it before January 29th at the latest. That's kind of my take on it. All right, but thank you all for participating. It shows that 80% of you are understanding this, and the other 20% we need to spend a little more time with you, which I'm happy to do by coming on to another webinar or working with Josh to understand these techniques and systems a little bit better, the rules a little bit better. All right, eBay. Another bearish stock. Look, it's been bearish since mid-December. it just started coming around a little bit on relative strength, but it was bearish for a very long run. And look at the big chunk of money coming out of this stock for a long, long time, like a year. So you got this money flow sell alert again when it hit the high. Look at it, bounced way over that volatility band back in February. It's a little hard to tell because the other data points are on top of it. But back in February of this year at 46, it hit its high. It was an all-time high. But look at money coming out. Even though power gauge was good and relative strength was good, big chunk of money was coming up. That's saying institutions are selling, sell this stock now, take your profit. And that was at 46. And here's why it's so important for you to have your own data and your own system, because you all said information overload was, I think that was the second biggest challenge you all had. You can't believe on everything you hear, and they now have these news cycles, 24/7 news cycles, and people have to fill time. So they talk, and it's not always helpful. Morgan Stanley just 2 weeks ago came out downgrading it. 2 weeks ago. I mean, that's crazy. This stock has been underperforming since February, and they wait till December? December from February, that's what, 10 months later? They're now coming out saying, oh, hey, we're downgrading this stock. And on December 12th, they downgraded to 29. Now, they did come out and say, admitted a mistake. And here's, we were wrong. They waited so long. They had a buy rating on this. So, you can't believe everything you see. I mean, you'd think Morgan Stanley would steer you in the right direction, but you can't assume that. You've got to have your own tools that you can make your own decisions and evaluate yourself. And certainly looking at the red on this chart and all these red triangle sell signals along the way, this is a clear indication that the stock is going nowhere but down. It's now come up a little bit to 30, but it's still bearish power gauge rating. I mean, this stock is really not a stock I would be investing any money in. Okay, one last example of a bear, and this is Wynn Resorts. Now, our chief market strategist, Dan Russo, is incredibly skilled. He's head of the New York chapter of the Market Technicians, not consortium, but the Market Technicians group, professional group. So he's got serious, strong credentials. He comes out with a daily note to our members. And in one of those back in August, he was suggesting that this stock was going to be dropping. He was reading the sell signal here on August 27th and suggesting some strategies to bet on the downside with options. He recommended a short trade and a vertical put spread, and he closed the short out with a 30-point gain and the put spread for 158% gain. So these are additional resources you have at your disposal when you are a member, is that he'll walk you through a strategy, basically tell you when to get into a vertical put spread or a short trade and when to get out. And Josh is our resident expert on options. He teaches classes twice a week to our members on how to trade options with this overlay program we have, Options Play. So, we don't have time on this webinar to get into that, but a lot of our members have made a lot of money betting on the downside with these put trades. Like George here, in the 5 business days that he's been using Chaikin, he's paid for the subscription over tenfold. These initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. And this is someone who was trading options where he could make some serious money quickly. All right, so I made you a promise in the beginning that you would discover how to find the best stocks to buy on the pullbacks. Hopefully I delivered on that promise. If you can just go to your Q&A box, if you don't mind, give me one other call out saying yeah, delivered or no delivered, did not deliver or delivered. Hopefully you'll feel that I delivered. Carrie, thank you. She says, love it. That's great. Thank you. David says delivered. Matt delivered. Teresa delivered. Sandra. Okay, great. Oh, this is great. Okay, good. So wow, a lot of delivered. This is great. Thank you all. This is great that I explained it in a way that was understandable. Because you can do this yourself. You know, you don't need to wait for Jim Cramer or Mark Chaikin to tell you what to do. You can find these stocks. You know, I found CRM myself, for instance. I found Allergan. You know, I found all these stocks myself. Now, they've also recommended them, which is great. That's great confirmation. But I don't need to wait for them to tell me what to look at. You know, I can find them myself through the tools, particularly the screener. The screener tool is awesome. So this is all about getting money, investing so that you can earn money and profits and enjoy yourself. I mean, go to Italy. I mean, my doctor said, he said, I should go to Italy again. So I told Mark that. He said, the doctor said I should go because, you know, life is short and I'm not getting any younger. And, you know, when I can make some profit and have that money to spend, I should enjoy it while I'm still in great health and able to enjoy it. So we'll be making some plans soon. Okay, so all of this was possible through Chaikin Analytics platform. We normally sell this for an annual subscription of $2,195, but as a webinar special, we're taking $300 off. And that offer stands till midnight Sunday. But I'm going to make the offer a little bit sweeter. So for those of you who can stay on for just a few more minutes, I'll make it more worth your while. We call these Chaikin bonuses. The screener that I showed you on the left, this is the options play. This is the overlay that we have that Josh will teach you how to use to trade options and make profitable trades, where it gives you 3 risk-reward scenarios and basically circles the one that they feel is the best. So it really takes a lot of the guesswork and calculations out of options trading. And then as a Chaikin subscriber, we'll put you in small group tutorials as early as I think tomorrow, right, Josh? They can get into a small group tutorial to show you how to set up your watch list, you know, how to use that alerts view to find the signals, and how to use the screener. This is all unlimited. You know, we do this ongoing for our members and encourage you to participate in as many of these sessions as you can. We also have a session every Monday for our members where Josh and Dan Russo, our chief market strategist, take you through what they see going on in the markets. You know, now, what are the opportunities? What are the risks? What are some of the new features we've incorporated that you need to know about? This is all unlimited. And if you find you need one-on-one coaching to really conform Chaikin to your trading methodology, you set up a one-on-one coaching with Josh or one of his colleagues, and that's unlimited as well. I mean, and it's free, one-on-one coaching. It's like a private tutorial. So, you know, our success depends on your success. We want you to be confident, successful investors. And another call out from Jim, if you do not use Mark Chaikin's work and Chaikin Analytics before you pull the trigger, well, you're going against 32 years of my work. This is really going back to Mark's creating the Chaikin money flow some 30-some years ago, you know, and now he's even outdone that with the Chaikin power gauge rating. So I told you I'd make this a little bit better offer for you. We're taking an additional $100 off when you join by midnight tonight. So take action now, and you'll be rewarded with an additional $100 off the membership. So it's $1,795 a year, which is a savings of $400 a year. So we hope to welcome you in the Chaikin community in this new year and help you realize stronger and more profitable investment decisions. Thank you all. You've been a great audience. I'm going to turn this back to Josh to close it out, but thank you all for taking the time to participate tonight. I really appreciate all the feedback that you gave us.
Thank you, Sandy, and thank you everybody for joining us today. To take advantage of Sandy's offer, you can give us a call at 877-697-6783. My colleagues are available to talk with you and to get you signed up, or you can do it on your own at www.chaikinanalytics.com/Sandy. That's www.chaikinanalytics.com/Sandy. I put the link out in the chat window. As Sandy mentioned, we have member webinars all the time. We have an onboard session that is live tomorrow. We also archive all of the stuff that we do, all of the resources available to you that Sandy mentioned, including Dan's Morning Insights, our chief market strategist, Mark's weekly newsletter. All that gets archived. You can go back and look at it, and you get it immediately as soon as you sign up. So again, you can call us 877-697-6783. If you have any questions, my colleagues can answer them and get you signed up, or you can go to www.chaikinanalytics.com/Sandy. Thank you all for attending, and I look forward to seeing you in a future session.